What is dividend stock investing, and should you invest into it or not? Welcome back to the channel. Fuego here, and today we're going to answer those two questions. So let's get into it. Dividend stock investing, it's literally the act of buying stocks or buying shares of a company that already pays dividends, or they plan to pay dividends in the short term and near future. Dividends are the act of the company sharing in their profit margin with their shareholders, with the business owners of the company, so that everybody can partake in the benefit and the success of the company. Typically, a company is going to do this when they don't have a very effective means to reinvest that cash and that money into the company so that the company can grow. Instead, they reward the shareholders and they say thank you to the shareholders for buying some of them and increasing the value of their company with the share price by paying them some dividends every single year, giving them a cash flow every single year. And so dividend stock investing is buying shares of companies that pay out this dividend to their shareholders. But now, should you buy dividend stocks? Should you invest in dividend stocks or potentially growth stocks or even alternative investments instead? And why or why not? What's the pros and cons of dividend stock investing? So, dividend stock investing to me is the most safe, effective means to invest for the long term. I say that because dividends going to pay me cash in the short term. They're going to pay me cash today, tomorrow, next month, next year. Not quite that frequently. Usually companies pay out on a quarterly basis, sometimes on a monthly basis, but they're going to pay me cash now. All I got to do is hold the stock for a prolonged period of time, and I will eventually get my money back from that stock, that initial investment. If I buy a stock at $100, or I buy $100 worth of that stock, and that stock pays me out a 2% dividend every single year, they're going to pay me $2 a year. That's not a whole lot of money. I get it. Theoretically, straightforward on the top, it's going to be 50 years I will get my money back. But I will get my money back, assuming the company doesn't go bankrupt in 50 years. But if they did go bankrupt in 50 years, I got money back from them, even if my initial investment goes down to zero. So I got something out of the situation, something out of the deal, even if they completely depreciate and go bankrupt, compared to a growth stock investment where you buy just the stock and you get no dividend. If they go to zero, you get nothing back. At the minimum, in a dividend stock investment strategy, you're going to get some cash back on a regular reoccurring basis, which in turn hedges and mitigates the downside potential that you have when you're investing, because every company has a chance to go to zero. Past performance does not equate to future results, does not guarantee future results, and so you never know what a company is going to do. Typically though, however, a company who is paying out dividends has established themselves. Usually they're at a point where they can't expand or grow entirely too much more, so they have well-established market share in their industry wherever they are, so chances are they're not going to go anywhere anytime soon. So should you invest in dividend stocks, or should you invest in growth stocks, or maybe alternative investments instead? What are the pros and cons of dividend stocks? Kind of talked about it a little bit already. The biggest pro of a dividend stock is the fact that they pay out cash every single year, typically on a quarterly basis, and give you a cash flow that you can use if you want to reinvest in the company, or reinvest into different stocks, or even live off of it if you wanted to, or help mitigate or help ease the burden of your living expenses because you're bringing it into your household income. That is the primary pro of a dividend stock investment strategy. A con of that is the fact that typically those companies that are paying out dividends typically don't grow very fast. Their actual valuation of the stock itself, their price appreciation, is fairly downsized. It's very small. Typically, the stocks are not going to grow very far, very fast, very big, but they typically do grow nice and slow and steady. They're going up and to the right in a general fashion, a solid 5, 7, maybe a 10% growth year over year. A growth stock, for example, may experience a 15, 20, 25%, even more year-over-year growth appreciation in the stock value, the valuation of the actual stock. On other sides, the growth stock investments can drop down to the right 10, 15, 25% as well. And typically, though, your dividend stock investments won't always go down, but if they do, they don't go down very fast or very hard. And so the pro of a dividend stock investment is the company's a solid company. It's typically going to be there for a while, and it gives you that cash flow. While the cons is it doesn't grow very fast. Your growth stock investment does grow fast. Typically, you have the chance of it, shall I say. While your alternative investments, those are tangible assets that you can hold on to, and those arguably are the most like gambling, because those have to be by you resold to somebody who's willing to pay the money for them. If you can't find somebody that can pay the money for the items, the physical, tangible items that you're trying to sell, then you're not going to make any money off of it. It's just not going to happen. Investing in stocks is a more reliable way and more easily liquidatable method of investment compared to your alternative investments. And of the two, growth and dividend stock investing, your dividend stock investments is the safer bet in the long term because you're getting that cash flow now that you can utilize for any fashion, whenever direction you want it to go. While your growth stock has the higher potential, but it'll build lower risk as well. So dividends are more reliable, growth stocks are more gambly, if you may. But really, to identify what is your personal preference of a method of investing that you really like to do, you need to weigh the risk versus the reward to see what your return on investment just might be. And to really understand what the return on investment is, that you can understand what that weighing and equation and balance will be for you, check out this video I've done right here, or I dive into just what return on investment is so we can understand it together. And I'll see you on that video.